4 years ago, after the onset of the global financial crisis, the world economy continues to struggle. Developing economies are still in the main driver of global growth, but their output has slowed. To regain pre-crisis growth rates, developing countries must once again emphasize internal productivity enhancing policies. This was revealed in the World Bank's latest Global Prospects report. Joining us now on the line from Washington is Alan Dennis, author of the Africa Regional Analysis Report. Thank you so much for joining us, Mr. Dennis. Can you just take us through some of the key findings of the report and what is its outlook for Africa?
Well, thank you very much for having me on your show. So as regards the key findings of the report, specifically as related to sub-Saharan Africa, what we realize is that notwithstanding the weak growth in the global economy, which was about 2.3% in 2012, sub-Saharan Africa continues its steady but robust growth performance. In 2012, it was about 4.6%, not too different from in 2011. Now, going forward, the factors that have been supporting this robust growth in sub-Saharan Africa are expected to continue to underlie the strong outlook going forward. So over the forecast horizon of between 2013 and 2015, we expect growth to be in a region of about 5%, which was just about its pre-crisis average growth rates.
Now, if we're looking at risk factors and vulnerabilities, take us through what is likely to impede economic growth, particularly if one considers that, big economies such as the US and China are still quite sluggish in terms of rebounding off, what figures were looking like at the end of 2012.
Yes, you're absolutely right. Even contained in our baseline forecast are significant risks. In other words, if some of these risks that you've outlined happen, then growth obviously is going to be weaker for sub-Saharan Africa. Among these risks include a further escalation of financial market tensions related to the euro area crisis, but also ongoing debt ceiling discussions in the US and also possible steep fiscal consolidation in the United States. And not to mention also in China, where many African exporters of metal products send their products. Again, a slowdown there could have serious implications on growth in sub-Saharan Africa. But I'd also like to mention that outside the external weakness that we see, there are also domestic concerns within Africa itself. In some countries, progress is being stalked by political instability. We've seen in Mali where there was a coup in 2000 last year, and also in other countries we've had protracted labor disputes, and then also in some other countries adverse weather conditions have also curtailed growth in these economies. So in terms of the growth prognosis for sub-Saharan Africa, there are also downside risks, but on average I would say that there's a balance of both upside and downside risk. The upside risk being that maybe the concerns in the high-income countries is a solution, and therefore that leads to increased exports for sub-Saharan African economies.
Now, of course, you mentioned the kind of world's biggest and second biggest economies, both the US and China. What does the report say about the knock-on effect of the crisis in the euro zone and its particular impact on Africa? If you consider one of the largest economy on the continent, South Africa has as its largest trading bloc, the EU. What does the report tell us about the developments in the EU and its implications for South Africa?
Yes, well, the European Union continues to remain one of the sub-Saharan Africa's largest trading bloc, Currently, it accounts for somewhere in the region of 20 to 25% of total exports from sub-Saharan Africa. So it's still very important. And by our own analysis, if there's a further escalation of tensions there, then we could see growth drop from our projected 5% to somewhere in the region of about 4% for the region as a whole. And this obviously has greater implications for South Africa because it is the most globally integrated economy in the region. But having said all of that, it's also important to realize that over the past 10 to 15 years, sub-Saharan African countries have diversified their trading partners such that now China or many countries in Asia are becoming as important as even Europe. So, for example, in 2012, exports from the continent to China reached over $100 billion. And this diversification of trading partners is helping to ameliorate or mitigate part of the risk from the weakness that we observe in the euro area.